why are we talking about Charlie Munger now? One of the reasons why we talk about Charlie Munger now is because his ideas are truly timeless. What he's taught us in our life goes beyond just our lifetime. It is for something that my kids, my grandkids, and for all of our kids, as well as us, can be great ways to live, not just make money. He didn't just help Warren Buffett build Berkshire Hathaway, he's helped millions and millions of people build better minds. You're able to think better because of his mental models. You're able to invest better because of the way he has made you believe in risk and return. So clearly, once again, this isn't just about money. It's about thinking clearly, living wisely, and investing with conviction. And let's dive into the man behind these ideas. So the first part being, let's figure out the man behind the mind. What has shaped Charlie Munger? How did he get to become such a force within financial markets as well, among people that pretty much look up to him all over the world, not just for his financial acumen, but to look at him as a leading example of the way we're supposed to be living our lives. So he's someone who grew up during the Great Depression. So for most of you guys that don't know what the Great Depression is, this would purely be 1929. Imagine COVID, but put it for 3 years instead of 3 months that we faced in the financial markets at least. 5,000 banks went bust. Stock markets didn't recover for almost the decade of the 1930s. The 1929 that everyone talks about, the low was made in 1932. So you're pretty much looking at full-fledged bear market, but for an entire decade. It took a very long time for people to recover. People's jobs were lost. Families had hardly any money. So he's learned survival, frugality, and grit, I would say. And that grit part is what has made him realize that come what may, he will survive till the end. He eventually became a brilliant lawyer. The company that they founded, three of these partners together, Unger, Tolles, and Olson, that is one of the leading, if not the best, law firm in America. And in New York City, they have one of the biggest offices, just amazing law firm altogether. Not just the financial acumen that the guy has, not just the billions of dollars that he has. It's also that he's able to create a law firm. So he is by far one of the best lawyers at that moment to have created such a law firm. The law firm still works with Warren Buffett's Berkshire Hathaway, even after the passing of Charlie Munger. And some of the things that he's come to realize is that true wealth comes from ownership and not from billing hours. A lot of us believe that what we get paid per hourly, per day, per month, per year, for the amount of hours that we put in 8 hours, 9 hours, 10 hours, it's not that. It is more to do with ownership. When you own assets, when you own homes, when you own land, when you own different ways where you get a return on that income and that gets generated again and again and again and again, which is what is known as compounding. That is the real form of wealth. That is what allows you to do what you want, however long you want, whenever you want, and with whomsoever you want. That is true wealth. For that matter of fact, it's not all rosy for Charlie Munger. He did face a very deep personal loss. His 9-year-old son died of leukemia. So you can imagine, right? I mean, one of his first kids at the age of 9 passes away in his own arms when he was at the hospital. And the man still carried on with grace and clarity in life even after that. So a lot of people would be able to, um, obviously, a lot of people, when they face those kind of losses, are not going to be able to bounce back easily. But he was able to look at that, go ahead in life with clear clarity. And he once said, and I remember reading this as well, he said that if you live long enough, you'll see everything and survive most of it. And now that you think about it, if you go back and look at COVID, a lot of us looked at it and said, maybe will we survive, will we not survive? But in a lifetime of ours, we never thought we would ever see a pandemic, but that's what we witnessed and survived most of it as well. That speaks of Charlie Munger itself, right? Losing your kid when the kid is just 9 years old. He had an eye issue as well while he was after the military. The doctor literally butchered up his eye. His eyesight got a huge problem. He's been through a lot in his early days, born during the Great Depression, but still he's taken one step at a time and kept going ahead and ahead and ahead. That's what's given him this ability to stay invested during bad times as well, because the things that he's seen in his life are far worse than what's just a 20% drop or a 30% drop on the Nasdaq or the S&P 500 would. And that's something that is just amazing. Coming back to another part is his mental models, which a lot of people speak about and not able to understand. And some of the mental models and what exactly it is, we'll dig deeper into that right now. So one of the mental models that he used to say was that financial terms was a trap. He believed that You don't get caught up in what the company's sales, revenue, earnings per share, and all of that is at most points of time, because those are metrics by which you judge a company's value. But if you only think of companies based on financial metrics, that is going to be a trap. It is going to stop you from thinking in an ultra long term fashion. He purely did believe in worldly wisdom. He said not just figuring out investing, but we used to pull ideas from psychology, biology, physics, history. Because one of the tools that he clearly made sure was of inversion. And that's a mental model that we'll talk about here for a bit. Because what inversion basically is it's the ability to figure out, if I do want to be successful in my life, I shouldn't be thinking, what is it that I should be doing in order to be successful? Or I have an exam coming up, I have a job interview coming up, so I need to be prepared for this. I have some investments, and when they do well, and I need to pay for a house, I need to pay for my child's education. How do I succeed at that? Is not the way you're supposed to be thinking. And this might be counterintuitive to a lot of you. But think of it this way. You got to figure out, how do you fail? How do I fail in paying for my child's education? How do I fail in paying for my parents' medical bill? How do I fail in not making good investments? Those answers come and avoid it. Let me give you an example when it comes to investing. If you want a successful investment, and I told you that here's a great company and they sell chocolates, Cadbury, for example, and you do realize that a lot of people will continue eating Cadbury irrespective of artificial intelligence, and that's a company that you should invest in, right? Successful, great. But it might not give you the same returns as, let's say, going to the casino and betting on a particular number at the roulette table. But a lot of people would still do that. The aim, what he's trying to say is that in order for you to be successful, look for the companies that sell chocolates, look for the companies that will grow 20, 30, 40, 50, even forever, rather than looking at the quick gains that you're going to be getting from in going to a casino and putting thousands of dollars on a particular number. That is how you look at failure. To look at the ways that you can stop yourself from making money, avoid them, and you will be successful. Because if you avoid all of these pitfalls in life, there is no reason why you would not be successful, right? One of the other things that he used to speak about was confirmation bias as well. That's one of his mental models as well. We go through three mental models in this episode. So the first one being, like we spoke about, which was about inversion. The second one being confirmation bias. Now, this is something most investors do face, because then we do face it irrespective in life as well. Because confirmation bias is a bias that when we have bought something, when we have either bought a car, when we have bought a house, when we have bought a stock, a particular investment, we start believing that that is the best investment, that is the best, that, and it can never do wrong. It is always going to be better than the rest. We start believing in that. That's called confirmation bias. We have to have a holistic view of everything that we do, not just in terms of investments, everything else as well. Stop believing that everything that you do is going to be perfect for you or is the best for you. Start believing and questioning yourself, because when you do question yourself, you will think of things from the other way as well. So do not go into this concept of confirmation bias when you invest in your company. If you have six companies that you have invested in and you are like, this is the best out of this sector, this is the best out of this sector. Find out reasons why it's not the best. And when you're able to put those reasons aside and not have to deal with any of those uh, denials of why those companies are not doing well, then you're going to be able to figure out and realize what confirmation bias is. One of the most important mental models was envy. What Charlie Munger clearly said about envy was, it is one of the seven sins, and you cannot even have fun about it. Stop looking at the neighbor, your best friend, your cousins, anybody that's doing better than you, worse than you, and start realizing that, oh, they have a better car, they have a bigger house, they have 6 bedrooms, I have 3 bedrooms, they're always happy, all of that. A lot of people only show you the brightest side of their life. What Charlie Munger said is, do not go in and figure out why somebody is doing better than you, even though you're working hard. And don't feel that that they should not have it and you should have it. That is some form of envy. It's not worth it. You thinking about it is not going to give it to you either, and is neither going to hurt the other person. It is just going to hurt you. So those are one of the mental models, three of the mental models that Charlie Munger clearly stated. And the reason why we're making this episode is because we want to let you guys know that everything in life is just not about investing and making money and tariffs and President Trump and everything else that's happening in the world or in the wars. There's a lot more than that. And some of the investing gurus, as well as people that we look up to, have pretty much taught us that don't look at everything when it comes in just numbers. The number of commas and zeros in your bank account are not the only measure in life. Look for a more fulfilled life, for what you can achieve, what you can do for your family, what you can do for your kids, what you can do for your loved ones, and what you can do for everyone that even does not know you. because that holds a lot of value as well. So let's go into the third part of the episode, which is sticking to our crux, which is the investing philosophy of Charlie Munger. And how did he invest, right? How did Charlie Munger invest? Charlie Munger was a fan of non diversification. He bought great businesses. He bought businesses that he knew could keep compounding their income, keep compounding money, keep making more and more money every year, irrespective of what the world goes through. Some companies continue to keep making money purely because they're able to increase their prices. And as you increase prices, if all of you guys think about it, a bottle of Coca Cola 10 years back was a lot cheaper than what it is today. For a matter of fact, what it was even 5 years back before COVID was a lot cheaper than what it was today. But I can guarantee you a lot more people drink Coca Cola today than they used to 10 years back. And that will continue for 10 years after. Cease Candies, another candy company that they own, out of the loom, where company that they own. Pretty much the same reason. You're not going to flip that for anything in this world. You are going to pay top dollar for it. You are going to keep paying. Even if the price increase by 2%, 5%, 6%, 7%, you're still going to pay for it. These are great businesses. He pretty much shaped what Warren Buffett's thinking of buying cheap assets and trying to get the last cigar puff out of them into buying great businesses, which is one of the main reasons why Warren Buffett still till today comes out and says that if not for Charlie Munger, Warren Buffett wouldn't be the Warren Buffett that all of us know about. He was able to compound his money for such long periods of time and make such hundreds of billions of dollars purely because he was able to do it over 50, 60, 70 years. And you cannot do that by buying cheap assets only. You have to buy great businesses. And great businesses at fair value is more important, and holding them for decades is even more important. You can pay a very expensive price for a great business, but you will not make a lot of money on it because it's already fairly priced. What is more important is to buy a great business at a fair price than buying a fair business or buying even a great business at a great price. It just doesn't make sense to do that. So look for great businesses, wait for the opportunities when you get them closer to prices that you believe are fair, even if the market believes them to be undervalued at that moment or overvalued at that moment. What you believe is fair, don't invest at that moment. So I would say the biggest investing philosophy was a great business at a fair price is better than a fair business at a great price. And a lot of us keep looking for that cigar butt or the super stock. We believe a ₹5 stock or a $5 stock is cheaper than a $50 stock because the $50 stock is such a large number, it's so expensive. It doesn't really matter that way. Look at the business that you're buying and buy those businesses because you want buy businesses that you believe will sustain for the next 10 years. Buy it in such a way that you believe they can keep growing their prices. If they keep increasing their prices, the share price would increase as well. You would tend to make more and more money. I think one of the real edges that Charlie Munger had, which a lot of investors, retail as well as institutional, seem to not have, is temperament, patience, and discipline. He was able to buy great companies, hold on to them for 20, 30, 40 years. That requires immense patience. Great gratification is the ability to say no to profit today in order to have more profit tomorrow. When you see $100 stock go to 200, your mind starts thinking, can I take the 100 out and start buying something else with it, a car, maybe a holiday. But when the 200 goes to 400, 400 goes to 800, you're able to make 4 times, 8 times, 16 times, 32 times your money. Sounds large, but it's possible these guys have done it. So it's not rocket science for it to be done. But what it requires though is temperament, which is the ability in your stomach to tell you to not press the sell button when you see things working. Because when you see things working in your favor, you should ride. Someday it'll stop working. When it does get to an egregious price, according to you, please do sell it. But for the large part of your life, do remember that great businesses will always have great valuation. And because of that, they will stay overvalued according to a lot of people for longer periods of time. So do not get into that mind game trying to think that you can time the market or there's a particular trading strategy that you can work with. They don't work. They work till they stop working and then they just stop working forever. So just stick to the discipline of longer term investing. The big money is not in the buying and the selling. It is in the game of waiting. Play the long game, wait it out. You will make money. The game is not played by buying today, selling tomorrow, buying today, selling today, or buying today and selling in the next month as well. That's absolutely not the game that Charlie Munger played for sure. Let's go to the fourth part of Charlie Munger's life, and those are his life lessons beyond money. And one of the things which Charlie Munger was asked was, what does he believe about success in life? And his simple answer was that spend each day trying to be a little wiser than you were when you woke up. Finish that book that you wanted to read, finish that call that you wanted to make, watch that show on YouTube or on any other channel that you wanted to watch, which made you a little bit smarter than you were yesterday. Maybe doom scrolling on Instagram is not the way to go. Maybe reduce that and spend 10 minutes reading a book. I'm guessing all of us can have 10 minutes to read some part of some book which we believe can be beneficial to our lives. And if you do that, you will realize that there's a lot more knowledge and wisdom that you are missing out on that you can gain. And it's never too late to start reading, and he was a man that constantly read. And for a lot of times, he has also stated that he reads more than Buffett. And Buffett is someone who would read a book or two in a week. He would read a lot more. And one of the other things, right? He just kept envy away. It was one of the deadly seven sins that had no fun at all. Even after being such a huge billionaire, he was very humble. So he valued humility as well. He never pretended that he knew everything. He stayed away from what he didn't know. And that's the thing. Success is staying away from what you don't know, because what you know, you will be successful at. So learn more about everything. And that's one of the things that he said. He always warned that ego is the enemy of good judgment. Most of all, he believed in learning from the mistakes of others. And that is something that you should use within investing as well. When you start realizing that someone's your uncle, your brother, your cousin, your neighbor is doubling their money every month in some scheme, they're clearly telling you is that they want you in on that scheme, not because they want you to make money. It's purely because they've been scammed or that they've just been getting money in the start. No one's going to give you more than 30, 35, 40% returns. 30% returns also is just unbelievable. But even to get those kind of returns for an extended period of time is close to impossible. Don't let ego be the enemy of good judgment when it comes to money and as well as in life. I mean, this is funny though, but he did clearly, I used to remember, he clearly used to say that you don't need to pee on an electric fence to learn not to do it. So learn from the mistake of others. Don't, don't go down that road of trying to learn that mistakes by yourself. If you know that that road must not be taken because a car has already been on that road and met with an accident and it's a one way, no reason for you to go down that same road. The same reason as why you don't do it in investing as well. Right. Anyways, we're not going to take up too much time. We're just going to get back to the last part, and which is the legacy and final thoughts that are pretty much there about Charlie Munger. And what's Charlie Munger's greatest legacy? What he said was his wealth isn't measured in money; it's measured in clarity, in conviction, and how well you understand the world. What that means is, like we earlier said, don't judge yourself by how much money you have, how much money you have over somebody else. Measure yourself by your clarity of thought. Measure yourself by your ability to distinguish good and bad and clearly understand the world for what it is. And if you generally think about the five things that we've been saying today, if you put them together, you pretty much will be able to know that a man like Charlie Munger, who never wrote best-selling books, never chased fame, never went on any of the red carpet arenas, he never made sure that people would make money from his advice. What he made sure is that people would think from his advice, and thinking makes you become a builder, and building eventually makes you build money because you're going to build a startup, you're going to build a website, you're going to build a company, you're going to give jobs. So his ability to think is what he said is by far the reason why he has got into wherever he got into. Money was just a secondary thing that came his way. I think we'll leave this entire episode with one thing that Charlie Munger said, and that is by far maybe the most important thing, and that's why I've left it till the end. And that is clearly the best armor in your life, the best shield that you can have in your life for yourself is a clear conscience. Sleep at night knowing that you don't have a conscience within you where you need to worry about what other people are thinking, what you've done to people and they don't know, or anywhere where you've cheated somebody just to gain a few things, either money, fame, or whatever. Just focus on keeping a clear conscience. Some of these things are by far take you from a C or a D game top level to an A game. And most people would just look up to you and be like, what changed in your life? And maybe it's this 20-minute video, but it's just these few things. Even if you could get one out of these working for you, make sure you let me know in the comments which one is by far maybe Charlie Munger's best advice to live life and to basically think clearly. Anyways, guys, this is by far, maybe one of my best episodes to talk about Charlie Munger. Hopefully, we will be making a few more about Charlie, Warren, more about life than just about money because the money videos will still keep coming. Anyways, guys, take care. Have a good night and have a good weekend. Thank you.